In this week's episode of the Stockscores Market Minutes, I'm going to show you one of the most important things that traders must do. And the question is, do you do this? Plus, I will do my regular weekly market analysis. We're going to look at the day trade of the week on SONN and do a Stockscores Market Scan in search of some longer term opportunities. That's all coming up. So what is it that every trader must do? And yet many do not. In fact, many do the opposite. Well, we must trade the market that we have. And there's a tendency for people to trade the market that we had. They go to the areas where there was action and great profits in the past, hoping that they will be able to mine that sector or that idea for future gains. So for example, the cannabis sector was hot earlier in the year and it is now not hot. And yet there are still people trying to buy those stocks, trade that sector when it has cooled off. What we have to do is look for the next hot market. We want to be on the front side of the upward trend, not on the back side of the trend, which is really a downtrend. I'm going to show you a couple of charts to demonstrate this. Ultimately, we make money in the market. We can beat the market by going to the hot sector and not going back to what was hot before. All right, let's take a look at a couple of charts that demonstrate this. This is a marijuana life ETF. In other words, it's based on cannabis stocks. And this is when it started to heat up. You can see the volume came in, it was breaking through some resistance, and then you had another breakout here, and maybe a little break of a pullback there. Those were all good times to get into the cannabis sector. Once the trend goes parabolic and then breaks down from the parabolic, the party's probably over. The party is certainly over when the upward trend line, the linear upward trend line, is broken. And so at this point, you do not want to be trading in this sector, not until it can start to do this again, which is building rising bottoms, breaking through resistance on the front side of a trend. Let's go take a look at another example. The gold sector, again, was hot starting in 2019 when the COVID pandemic came in. You can see that we had this level of resistance here that was broken. This is volume coming in. By the way, this is a weekly chart, so this is by no means time sensitive. This was something that started around the middle of 2019, and it had a break from a pullback here, and the trend went up nicely, linear trend, and then ultimately went parabolic, broke the parabolic trend, and now we're on the backside of the trend line. Now gold could hold this longer term upward trend line that I draw like that, and it's trying to do that now, but it can, until it can start to build rising bottoms and break through some resistance, it is a hot sector that was, it is not a hot sector that is. All right, let's get into this week's normal market analysis, starting off with the S&P 500. And you can see that the large cap US stocks are still in an upward trend. This is the short-term chart here. Bottoms are rising, the trend is up. Volatility has been quite low the last little while. Even here, quite low volatility. So there actually hasn't been a lot of action there. The volumes are slowly coming down. So the excitement in the market has come back. We need that next hot sector to give us some areas to trade with some excitement. Now looking at the longer term chart, you can see that the trend is up. That's great. We haven't really gone parabolic. It's a linear upward trend, so that's healthy. But again, the volumes are slowly coming off. There's just a lack of excitement right now. If there is an individual stock that has something good going for it, it can do well because the market's not affecting it negatively, but the market's not really helping most stocks either. Looking at the the Nasdaq 100, the daily chart, again, you can just see that very quiet sideways trading. And really, we've been in a sideways range for a few months. We need to break out of that range. We need to get some excitement, a pickup in volume. That will create lots of opportunity. Because we are compressing in volatility right now, you can see that I can draw lines that are converging toward one another. That compression of volatility is what comes before the next move. It's sort of like a spring coiling up, getting tighter and tighter, and then it pops and you get the next leg of the trend. Here is the Russell 2000, also a coiling spring. You can see the bottoms converging toward the tops. That's called an ascending triangle pattern. The volatility is diminishing with each wave. That compression of volatility ultimately should lead to a breakout, but if it leads to a breakdown, then we'll be cautious. But since the trend into the pattern is up, it's most likely that the trend out of the pattern will be up. All right, Canadian markets, very similar. We've been sort of in this quiet sideways range, perhaps a little more volatility on the Canadian market of late. The bottoms are rising over time. That means the buyers are in control, but it's been a little sleepy there as well. Looking at that longer term chart, you can see the trend is up. No reason to be too fearful. Just need a little bit of action to come back to the market. Now here's a market where you have seen it go hot. That was largely because of cannabis and gold. And then we broke the parabolic trend. And now we're on the back side of the trend. We need to start to build rising bottoms, start to break through some resistance before those microcap stocks in Canada can do well. All right, currencies. You can see the US dollar broke its downward trend line there, and then it's pulled back for a few weeks. This week it closed above its open, and so it should maintain this cycle of rising bottoms. This is a market that is trying to overcome pessimism, trying to reverse the weakness of the last year or so. And it looks like it will, but I think it will take time because it has all of this longer term pessimism to deal with. So I'm cautiously optimistic about the US dollar, but certainly it's not going to happen too quickly. Now, Bitcoin, I talked about this last weekend because here we had the breakout, right? Here we had rising bottoms. So this was when the Bitcoin chart got optimistic, at least in the most recent time frame. That was the time to be buying it because it was on the front side of the trend. Well, now the upward trend line has been broken. It went parabolic. It's breaking down. It may go up for another couple of weeks, but ultimately I think it's going to roll over and it is more likely to go lower than higher. It may only go sideways. Sometimes when upward trends are broken, we just get a sideways trend out of that. That's certainly possible. But I think short term, talking about the next few weeks, there's not a lot of optimism to be had for Bitcoin. All right, commodities. There's the gold chart. Talked about this a little bit already. That longer term upward trend line is what is holding, but we still need to break this downward pullback line. And until we do, I would be cautious with gold. Oil had a little bit of a bounce the last couple of weeks. It is in that upward trend. It pulled back. That's healthy. Trying to break the pullback. I think it's going to head back up into this zone right here. And so I am generally optimistic about oil. And finally, the fear chart. You can see that it is in a downward trend. Now, very quickly, some might wonder, why does this thing just tend to go down over time? It's because the VXX is based on short-term futures contracts for the S&P 500. What that means is it's looking at what expectations are for the future and what people will pay for that future, locking in the future price today. Well, futures contracts have something called time value decay. Over time, they lose their value. And that is why this in general will go down over time. The only time that this goes up is when there's aggressive buying of those futures contracts, which increases what people will pay for the time value. I know that's a little bit confusing if you've never looked at a futures contract or options. They both have that same concept. But in general, these things that are based on futures will go down over time. They are short-term trading vehicles to take advantage of fear, to take advantage of corrections in the market. This is not something you should ever hold long-term. It is something to trade during times of market turmoil. And so when it is, coming alive like it did here or here, as a day trader, we can be in and out during that time frame. But to buy it here and hold this thing thinking that there's going to be a correction one day, it's a very bad idea because of that time value decay. It's always day after day losing value. All right, let's get into our ratings then. Bullish on both time frames for US and Canadian stocks. On gold, long-term neutral, short-term bullish. It is trying to bounce off of that trend line. And oil, long-term bullish, short-term neutral. It's trying to resume the trend, a little bit more work to be done. So there's a lack of a hot market right now. And that means that money is kind of buried maybe in some of those old hot sectors, and it hasn't come out to go into something new yet. And so while the market cap weighted indexes move to new highs, realize that they're a bit tainted. Those indexes can go up because a few of the largest companies in that index are going up. But right now, many stocks are actually still recovering from the profit taking that we went through in mid-February and into March. So be patient, wait for new areas of strength, wait for those areas that are starting to come alive, breaking from rising bottoms. If you do your market scans every day, if you watch the indexes, the sector areas, you will find it. You have to be patient and wait for it. And don't go back and trade those old areas that are on the backside of the trend. Now, right now, gold is relatively boring. Oil is still in that upward trend, but needs a little bit more life. And as I said, fear is low. All right, let's get into this week's day trade of the week. I do these as an example of what we do in the active live service every day. Essentially, we are looking for something called an action candle. An action candle is my own little invention. It looks for statistically significant abnormal price and abnormal volume. And when that comes, if we assess the chart and find that it is breaking from a predictive pattern, we often get good trading opportunities. So here is one that happened on Friday. The action candle is the little pink dot. You see one there, you see another one there. But notice that nobody cared about this stock. The volume was very low. This, by the way, is a 2-minute chart. So through most of the day on Friday, it was pretty quiet to start, and then it comes alive with volume, and it comes alive with abnormal trading activity. And I've got an algorithm that runs on every stock listed in the US stock market looking for stocks that are doing this, doing it in real time, so I can catch it here when the action starts instead of up here when it's too late. Anyway, this one, the economics are as follows. For $100 of risk, you would buy 2,000 shares. If you wanted to take $200 of risk, you would buy 4,000 shares. Those 2,000 shares cost $4,220. Because this stock is under $3, you cannot margin it, for most brokers anyway. And that means that you had to use that $4,200 of capital to make the $520 gain that it had by the end of the day. But still, that is I've got their 12.3% return. That should be a 25% return. Just doing the math in my head. I must have typed something in wrong. Either way, it's a great return on a one-day hold, and that's the kind of day trades that we love to find. All right, let's now do a Stockscores Market Scan. The Market Scan tool is useful for longer-term trading, not for day trading, but for position trading. Those things that you might do in your retirement portfolio take 15 minutes a day, 15 minutes a week to identify opportunities in the market. So let's jump into the Market Scan now. The scan that I like to run every day right now is the abnormal break scan. We can run it on the Canadian market or the US market separately. The reason we do it separately is we just have a different liquidity requirement for the US market over the Canadian. In other words, we want to see more trades on the US market because it is a more liquid market, and that's the only real adjustment. Other than that, it's doing the same thing. And what we're looking for is stocks on the front side of the trend. So here is a stock that's on the back side of the trend. It broke out and started showing life back here. Now it's inside a downward trend. And so although it made an abnormal price gain on Friday, it's moving up into pessimism. And that's something we want to avoid. It's not working very well. Here's another one moving up into pessimism. Now it moved up from optimism back here. You can see rising bottoms. That's a sign of optimism. This is when it was a buy. It made a nice move. It went parabolic. You broke the parabolic. Then you broke the linear trend. Now you're on the back side of the trend. And so these are deceptive signals because yes, they are making abnormal price gains with abnormal volume, but they're doing so into pessimism. We want to do that out of optimism. So as you go through your market scans, be very aware of this concept because so many stocks are on the back side of the trend because we had great moves in the market at the end of 2020 and into early 2021. Here's another one. It's now on the back side of the trend. We want to ignore those. All right, so as I go through these, I'm looking for stocks that are showing abnormal price and volume on the front side that are breaking out from optimism. And most of the stocks that I'm seeing are not doing that. And that is why I am buying very little right now. I am sitting on cash waiting for stocks that are making breaks on the front side of their trends. Now this is a situation where it's a resumption of trend. All right, so it started its move, say back here, and it's been in a nice linear trend line. It went a little bit parabolic. It pulled back to the trend line, and now it's bouncing off of the trend line. And that's a decent setup. We call that a pullback play. When stocks run away from their trend line, pull back to the trend line and bounce off of it, they're probably going to continue that trend. So I would give this a 6 out of 10. I don't love them, but they're pretty good. Here's one that was good about a month ago. You can see the ascending triangle pattern breaking out. That would be the time to buy that. It's a bit boring. It's just a very low volatility fund, so not the kind of thing I like to trade. But if you're looking for something relatively safe with a decent yield, back early in April, that was okay. All right, so we'll finish up this scan looking for stocks that are on the front side of their trend, breaking out from sideways trading, breaking out from optimism. And we may go through all of these candidates and find nothing because it is a little bit more slim pickings right now, and that's okay. That is what builds the base for the next move. And we can see from those big market indexes that we're gearing up for the next move. Here's another example of one that was good. This is what I want you to be looking for right now. So here is your resistance. There's your breakout with abnormal activity, your optimism from rising bottoms, and buying at 225. Now it's at 250. So that is what we're looking for, is this kind of a situation. All right, we got a few more charts to go through, and then we'll wrap it up. I think this is the last page, and this is not particularly good, although it was good here. There you see, breaking out from optimism, front side of the trend. If anything for today's lesson, I want you to keep that in mind. Do not be buying stocks that are breaking up into pessimism. Do not trade the market you had, the hot areas of the past. You got to be looking for the next hot areas, those stocks breaking from optimism through resistance without trying to overcome that downward trend. All right, well, that has been this week's Market Minutes. Hope you've enjoyed it. If so, please click on the like button, leave a comment. Let me know what you think of the market going forward. But most importantly, next week, trade well.